Hello guys, welcome back to my channel. This is Hakman Traders. In this video I am going to be telling you how you can recognize a bearish reversal when a trend is at its highest high. So let's get started. As you can see here in this chart, you can see at this level here, let me make it clear for you. Right here, you can see this candlestick right here, the green one, which showed signs of bullishness, but as you can see that it opened right here and rised up till this point here, forming a higher high right here at the end of the wick, but eventually it got back down as the bears pulled it. The bears pulled the market down. You can see that the next day was also bearish. It showed it was a bearish candlestick, so you can guess from this that I've told you previously that in my previous videos, whenever a candle opens above and closes below, it shows signs of bearishness. It may not be a bearish trend, but it may be like a correction or a pullback, a pullback is something like that. As you can see here, this was something else. It got like this, uh, forming a U type. You can see here a U type, you can say whatever it is. You can see that it is a bearish candlestick, and the and as it opened above and closed below, the next day what happened is the same thing happened. It was slightly bullish, but the rest of the days were not bullish. You can see that they opened below, far below than the previous one, and the market traded in that way. Again you can see here that again you can see at this one right here, this is a bullish candlesticks, but it did the same thing as well. This was quite a fight. This candlestick shows that the bulls and the bears were fighting to gain control of the market, but the bears were gained strength, and they got the control of the market, which they pushed the market down up till this point right here. And this point you can see and this point you can see that the bears pulled the market down, but the bulls pulled it back up. You can see here it opened above and it showed signs of bullishness. It showed slightly signs of bullishness, I would say that I would use that word. And you can see this one is very bullish. Again it did the same thing. You can see here at the end of the wick and closed below, showed signs of bearishness. You can see it's now still trading. It's now in a bearish, like a downtrend. If I draw a line from here to here, you can see that it is a downtrend. It's trading in a downtrend direction. You can see it's clear. Another thing I want to show you is right here, the RSI. With this RSI, you have to, like I've showed to you these areas. So with the RSI you have to recognize what are the overbought levels and what is the oversold level. You can see here that this level acts as an overbought area for the prices for the price of these areas, and this act as an oversold. What it is, 17, 18 level, something like that. And what is this level? 48 level. Again this same 48 level acted as an oversold area, the 41 level. This was 48, but this is 41 now. This acted as an oversold area, eventually pushing the prices back up. So by trading these, you'll have to consider these as well for your trading, so you can better recognize what is bullish and where is the bullish signs of bullishness and where are the signs of bearishness. Again that same 43 level over here acts as an overbought area. You can see here last time it acted as an oversold area, pushing the market back up from that same level. You can see it pushed the market up 1, 2, 3 and 4 times. 4 times it pushed the market up, but again it when the market pulled down, you can see that it's still trading like this in the overbought area at the 41 level. Sorry, no, yes, it is acting now as an overbought area. You can see here. So this was the relating to this type of pattern. Now I will show you in this one. It's quite of a side trend. You can see here. For a side trend, I want to be sure. I want to tell you that you will have to use in the RSI for this as well. If you want to, if you're comfortable with another indicator, that's totally fine. You can use that. But I'm using the RSI in this case. You can see you cannot like recognize where will the in a side trend you cannot recognize the highest of the bearish reversal at its highest point. As you can see that the uh, as you can see that it is a range bound market, the price meaning that the prices are fluctuated in the same price is the highest price and the lowest price. You can see here these but here it opened above and closed below. This was something else. But again, I have showed you how to trade a side trend by applying some indicators. In this case, you will have to use this RSI. You will apply the same technique here. You will have to recognize the overbought and the oversold areas. In this case, the overbought area is this one, the 41 level, and the oversold area is somewhere here, the 65 level. It it broke that 65 level and closed above. That's no problem. It's happened sometime. But in this case here, if you're not if you don't understand a side trend of how to trade it, then don't trade a side trend unless you are comfortable with it. Try out this in a demo account. You can do that in the forex market. They provide a demo account, but here you can see that that it is difficult to trade a side trend, and also to recognize the bearish reversals at different levels. You can see here, I will show to you an example. This is a bullish candlesticks. Again, it showed bearish sign. This one here, bullish, now bearish. You can see here bullish, bearish, bullish. So you cannot recognize the bearish reversal at its highest level. Now this is something else. You can see it is trading. It is also a type of a side trend, but trading upward. You can apply the same method here. You have to recognize the overbought and the oversold areas, which are these levels for it. In case if you like bought if you like in bought the stock here, and it starts to fall, like starts to decline, so what you will have to do, you will have to place your stop loss in this case. In case if the market goes further down, further below that level, below the stop loss, so you will have to close your position. And other than that, the market, you will have to recognize the overall trend of where the market is heading. In this case, it's a side trend, but it gained strength right here, and again it was side trend going back up. So in this type of situation, you will have to use your indicators and carefully analyze the market of how it's doing. Along with that, you will also have to know whether the investors are interested in the market, the bulls are interested, or the bears are interested in the market. If the bulls are interested, so you'll have to place longer position, and if the bears are interested, you will have to short your position at different levels. You can see here, this is the 60 level. I will consider it as a 60 level. 59, I will consider it 60. This is the 41 level. You can see at 60 level right here, this is bullish, but now as it came down, you will have to like short your position right here, or but shorting your position is also difficult in this case. I would not short my position in this type of case, as it is 100% risk in this level. So in this type of market, so I would not short my position in this case. Well, that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.